Hi guys, this is Vitaly with AFT Dispatch and A2C Logistics, and in today's video, I wanted to fulfill a promise that I made for you guys in the last video, saying that I will explain in a more visual format, or I will attempt to explain in a more visual format what's going on in today's markets. Because as I mentioned in that video, I'll leave a little card in the corner. Make sure to watch it. It was it was quite popular. The video before that was, did quite well as well. So I'll leave cards in the corner for all these videos that I think are going to really help you guys understand, and maybe will put some of these myths at rest finally, because a lot of folks in the comments were talking about, look, there's no freight recession, there's no issue with too many authorities, too many trucking companies, too many trucks on a road, not enough freight, that none of these things are actually real. And I wanted to make sure to explain this to you, to show you guys and give you proof that this is actually the case, and to actually kind of give you an idea visually what you can anticipate, what you can look forward to, and what's currently happening in the market now. Now, it's one thing to kind of understand this information. It's another thing to be able to explain it to another person. And this is kind of where I've been going back and forth over the last few days, especially today, just really running this through my head on how I'm going to explain this to you. So, bear with me, stick around. I think that you're going to learn quite a bit. I think this will be an eye-opening video. I hope that you will share this video once you're done watching it. And for those of you guys, I know a lot of our audience is driving a truck when they're watching our videos or when they're listening to them, and there's nothing wrong with that, because most of the content that we produce can be consumed in such a manner. This video, I think you'll glean a lot by listening if you are driving. But if you get a chance, you're doing your reset, whatever, rewind the video, watch it all over again. I promise you, once you see the visuals and everything, it will make a whole lot more sense. So I'm gonna go ahead and let's jump into our web browser, and let's see here. I gotta switch over. Okay, so I have it kind of systematic, so we'll go step by step. If you have any questions whatsoever, you guys, give me a buzz and in the comment section below, or give us a call, a text message, whatever you got to do. If you got some questions, get it going. So right now we're going to look over a tweet by Luke Falaska. He is one of the data nerds at Sonar. Basically, he works with freight waves, and we'll look at some of the other guys like Craig Fuller. He's he's the founder and CEO of Freight Waves, and definitely like to follow his stuff. Now let's get going, guys. It says the current amount of trucking authorities in the U.S. is at 2030 levels based on the trend beginning in 2010. Don't mind the 2030 levels, I'll show you. We have too much capacity right now, way too many trucks. Even with the demand bump that we have been seeing, it has had zero impact. This is one factor keeping truckload rates suppressed. Now let's take a look at this. This is the visual part that I'm hoping to explain. Now, as you can see, this right here looks to me like maybe the end of the first quarter of 2020. And then guess what this blue line is? This is the total trucking authorities in the US, right? The carrier details, total trucking authorities in the United States of America. What we see here is a giant spike. We went up 139, almost 140%. That means that the industry had more than doubled in a very short period of time. If you draw a line from here to about here, this is where we are now. This was all at the end of August 29th for this chart, I believe. So as you can see, in this entire period, we had this huge spike. That's a lot of new trucking authorities, and considering that each trucking authority is going to have at least one truck, that means that a lot of trucks have entered the market, and we'll look at those numbers as well. So just follow along. This is how much we've gone down. Now we have to go down a lot, right? So how would you draw this trending line? Would it go like this straight into like what, 2032, 2035, or would it go crashing down further? Now what it looks to me is that there's just no way that a lot of these companies will be able to sustain themselves at the rates that we have today, and at the level of expense to run a trucking company, to run a truck out there. They're just not going to be able to do it. So this is probably going to crash and tumble quite heavily. All right. So there's your proof that there's been a ton of new authorities that have entered the industry, which means a lot of more trucks, right? A lot more drivers. So let's keep going here. You had some really, really good information. Now in this, in here, what we're going to see is, come on, open up. All right. So this is the same line. This is the number of trucking authorities. So it's not shaded in. You can see the huge spike going up, and it's just barely now normalizing, and where it's probably going to go further. Now, this is this other line here, this blue line, is going to be the number of trucks that were out, right? So this is the change since 2010 for higher trucks, basically, or tractors, right? So what we're seeing here is that there was a huge amount of trucks being added. I mean, this is just a steep incline. Now, yeah, there's been some trucks being sold off here. We see, again, first quarter 2022, market, went down, but people kept buying them and then just kept going in there. And more authorities throughout this time were still going. They were growing. They kept doing it. In fact, they're still doing it. It's just at a reduced rate. We've seen that before. We've talked about this in recent videos. So new authorities have outpaced, and this is only since COVID, the number of tractors. And the question is that a good thing for the market? So, I'll leave that to you guys. But this is, again, proof that more trucks have been continuously added and new authorities have continued to be added. Now, this is another person here, Disruptor Stocks is the account name. Another really good image that I gotta show you. So the one you want to really pay attention to is this white line here. Now, what this line is indicative of is 1 to 6 trucks that were added. Now, look at that. There's this huge spike over here. This is 2018. Those of you guys been in the industry, that's the ELD years kicked in. There's a bunch of trucks that got added on, and it just kept growing and growing. Now, what do we have here? So right around here is about the first quarter of 2020, started getting a whole bunch of trucks getting added. Boom. What is this? Oh, okay. So here, this is about 2021. We're seeing the peak of the market, lots and lots of money. People are just rushing in, buying trucks. Again, inflated prices and inflated interest rates, extremely high operating costs. And it just continued, and they just kept buying trucks. And again, 1 to 6 power units. And that's what we're basically seeing at this point, is that the numbers have to go down in order for the industry to become profitable again. Now, it is still profitable for a lot of folks, but a lot of companies are struggling. That's why they're closing down. Next, we're going to actually dive in and talk about some of the stuff that Craig Fuller has been talking about. Again, he's the founder and CEO. Again, I forget, maybe I'm saying the last name wrong. Maybe it's Fuller. So in any case, I hope you forgive me for that, Craig, and let's move forward. I wanted to start with this slide, and I highlighted this because what we're going to talk about is going to be super important in terms of who's saying what and do they have the credentials to do so. Now, here it is. We were the first to call. This is him in response to someone saying, listen, this is just a bunch of baloney. There's no such thing. Right there. This is hopium. Those of us who are watching load boards, talking to shippers in real time know what's really going on in the freight market. These charts don't mean much. Rates are not affected by the increase of freight at the moment. The worst is yet to come for the trucking industry. And he says, listen, we were the first to call the robust recovery in freight in April of 2020. And we were the first to call the freight recession in March of 2022, all based on the signals from the same high frequency data that is shown in the charts that he's referring to. Now, let's look at the charts, guys. Let's look at the charts. And remember, very expensive software. And not only that, you got to know how to read it. So here's something that I wanted to look at that he just posted recently. The freight market bottomed on May 14th. Remember how we made a video, those of you guys who follow our channel consistently, we made that video where we talked about how we're just dragging along right around $2. That's where the market is. Not us as a dispatch company, not us as a carrier leasing on owner operators, but rather the industry as a whole is dragging along the floor, occasionally dipping lower, occasionally coming back up. But the bottom line is that the freight market bottomed out on May 14th. Since then, conditions have continued to improve, and we'll look at that. Now, the OTRI, as I guess it's pronounced, or maybe otherwise, but the OTRI, the Outbound Tender Rejection Index, and by the way, this right here is a fantastic definition in just such a short paragraph of words. He says it correctly. So here we go. Just lays it out for us. The Outbound Tender Rejection Index, OTRI, measures the balance of supply and demand in trucking by measuring the percentage of truckloads that are rejected. So again, hey, not enough money, Mr. Shipper. We need more money. That's a rejection. Then maybe they come back, higher money, they pick up the load. The data comes from the tender messages between shippers and motor carriers. Tender messages are requests for trucks in the contract freight market. Again, this is the contract freight market, but remember, going back again a few videos, we had talked about that the contract market and the spot market were running side by side together with each other. And so we can actually glean quite a bit of information for the guys in the spot market based on the information that we can find in the contract freight market. Furthermore, rejection tells us that a carrier is telling the shipper that they have other options for their trucks, just as we had just said. Right now, the higher rejection rates mean that the balance of supply and demand is swinging in favor of trucking fleets. Now, let's look at the image, guys. What do we see here? What we see here is right there. OTR measures the balance of supply and demand. Increasing rejection rates means the market is swinging in favor of the trucking fleets. Now, what we're seeing is a bottoming out right here, and then right in the middle, there's the 14th of May. And then what we have here is the latest information from the middle of July all the way to the end of August, beginning of September. We're coming right up. This is the Outbound Tender Rejection Index. All right, so super important. We are seeing an increase in rates. Now, this could come down. This could change, but things are improving. Now, let's jump into the really big stuff. Now I'm going to skip some of this and we're going to go out here. So first of all, volumes are up 12% over the last 6 months. We've talked about that. That's a big deal. Now, the more important one is right over here. Okay. So for most of the year, as he actually says, that tender rejections didn't follow the higher volumes, suggesting that there was just too much capacity. So too many trucks in the market. Now, here's what's interesting and what I see as differently. So just follow along here. If we look back, going back to the beginning of March, and it goes, this thing goes all the way up to the end of August. So there's your data right there. But what's interesting is here, this blue line represents volume, and this yellow line represents rejection, right? Rejection rate. So what happened here? Well, the volume kept going, and so because rates had gone down, the volume went down, but carriers weren't rejecting a rate. Then gimme. So I see this as a line of greed. So people, instead of holding back and say, "Oh, wait a minute, we can't keep operating. We got to change some stuff," and holding their horses, companies continue to take freight. It continued to go. Now these two bumps here are going to be your holidays, your 4th of July, etc., etc. And so what's happening is that for the first time in a very long time, what we actually saw is this little quadrant of the chart is where we're actually seeing volume increases, but we're also seeing an immense increase of rejections, which is basically saying, hey, listen, Mr. Shipper, I cannot operate at these rates. Things have to change, and things have changed. So we'll have to definitely follow along to September, October, November to see where things go, and if carriers will continue to hold on and to this and continue operating in order to increase the rates, because the volume is there and it is increasing. Now, what's also interesting is this one right here. Again, we have our volume and we have our tender rejection. Boom, tender rejection is up here, and volume is only down here about 1%. So it's pretty flat, but finally carriers are saying enough is enough. Now the next one's going to be very, very interesting, because this is looking at freight rates. How long can we operate? Now again, about the same time frame, but right here is showing about a $1.57 rate for on the truckload index. Again, very similar, same numbers that we talked about in the previous videos, talking about $1.57, 202, whatever, running around there. So rates have obviously trended down lower and lower, which is finally getting trucking companies to say enough of the cheap freight, enough of this operating below operating costs, enough of this, we can't run. So they have a rejection rate that increases because they're not willing to run these loads. Now there's always going to be guys who are going to run cheap freight, there's no question about it, and more can be talked about on that topic. But let's jump in on this one, diesel price. This is the next thing that's actually hurting you right now. Diesel's even above that. This is showing 438. Many of you guys are filling up with over $5 a gallon. So the truth of the matter is that higher diesel rate, which will likely to increase, and more authorities, way too many trucks, volume that is historically low, although it is improving and things are increasing. What's actually happening is that there's just a change in the demographic and the way that consumers are spending their money. There's a lot of stuff where we've seen a spike in shipments for destocking, where they were moving all the old stuff out and then not really bringing anything new. So we have a very different market that we're operating in, and if we go back to, where was this thing? Here we are. So if we go back to here, again, this is the most important chart here. And if you prefer to look at it on this way, there you go. So how much does this have to go down for the authorities to shut down, right? So in order for us to lose, shake off a bunch of new authorities that basically there's just too many trucks for the amount of freight. That's as simple as that. So all of these charts are showing you that this is the truth. So those of you guys in the comments who are saying, oh, there's no such thing, etc., what are they doing with the freight? They hiding it somewhere? Is it, you know what I mean? I just don't have an explanation, and I don't claim to have explanations for any of this stuff. So, I'm not an expert or anything like that. It's just been in the industry for a long time. We've seen these ups and downs, and this is a very different market. This is going to be a very different correction, because again, we haven't seen this type of spike in new authorities and a number of trucks in the market. We haven't seen this type of level of fuel in this at the same time, as far as cost is concerned. We haven't seen tonnage go down. We haven't seen, all of these things kind of mixed in with the volume and everything. So the correction is going to be very, very different. But again, what comes up must come down. So now let's look at another place, right? Cass Systems, the freight index. So again, we're going to go through and explain what these things are quickly. Hopefully I do a good job. And again, if something doesn't make sense, please leave your comments in the comment section below. If I can, I'll answer it. If not, maybe someone in the community will jump in the comments and explain that as well. Now let's jump in. I know we're moving very quickly, but I want to make these videos a little bit shorter, action-packed, info-packed, and make sure that you guys, kind of get what you pay for, if you will. Let's look at Cass. All right. So Cass is a measure of North American freight volumes. The data that they're basing their information on is within an index includes all domestic freight freight modes and is derived from 36 million invoices and $44 billion in spend processed by CAS annually. Okay, so huge amounts of invoices, lots of data. We can definitely take their word for it, considering that they're basically taking outbound info coming in from member sites, right? And they're basically a client base based on large shippers. Now, this is going to again look at the contract freight market, and again, it represents a broad sampling of industries, including consumer packaged goods, food, automotive, chemical, medical, pharma, OEM, retail, and heavy equipment. So this is touching everything from vans, reefers, flatbeds, and step decks, and even specialized. Annual freight volumes will vary from 40 million bucks to over $2 billion. So very large companies, and it provides a statistically valid representation of North American shipping activity. So that is the CAS index, and we'll look at this stuff as well. So this is actually showing the shipments as far as basically the number of shipments, and as you can see, this is going into July, decreases, June, July, decreases. Now, this is expenditures. This is also going to decrease because expenditures mean that warehouses and other shipping facilities, what are they spending? What are their expenditures on shipping, right? So if you're going to have a decline in your shipments, you're going to have a decline in your expenditures. So see, we see this huge spike after all the lockdowns and everything started just going crazy. Rates went through the roof. Boom, expenditures went up. Where did they go? Truckers' pockets. Same thing with shipments. Shipments skyrocketed. Same time frames. Now, the one you really want to pay attention to is the inferred rates chart. Now, you might ask, what that is, and we have an answer. Inferred rates are basically the overall movement of rates, specifically the cost of a shipment. So this is going to be a very good trajectory. This is seasonally adjusted versus just the index. So they're usually going to follow each other. And this is going to look at the cost of actually shipping something, like a load of something, right? Now, this is going to be an average of all sorts of different shipping methods. But at the end of the day, this is a calculation that's going to show you the cost of shipments. Again, it has gone down. We can see that. Another thing, when dividing expenditures by shipments, we calculate the inferred freight rate, telling the story of freight movement. Again, what does that mean? That means you take your shipments and you divide it by your expenditures and you get this. All right. So that's how they get those numbers. So there you are. And you can, by the way, you can get all this information. Let me see if I can jump in here. Here's your CAS index, guys. You can go through, you have your shipments, we have our expenditures, we have your inferred rate. And I mean, going back from 2009 to now, if you look at the shipments, 1990, all the way down to July of 2023. Lots of data, slice and dice, do whatever, become your own market maker, make your own charts, read, everything's provided. So none of this stuff is hidden. So what are we actually looking at here? What we're looking at is that the expenditures have gone down, the volume has gone down, shipments have gone down, and the amount of investment into shipping has also gone down. The rates have gone down, and then this is numbers for July. So what we saw here were actually numbers for June, and I'm actually going to show you something interesting. You can actually kind of follow along. So if you look at the expenditures, if I can line them up correctly, look at the freight rates, and here we are. So if I skip through these, you should see pretty close. So this is July, and this is June. We saw going down, data further, going down, kind of straighten out a little bit, but still going down. This is a negative. This is a negative trajectory. It's a trend line going down. So continues. Next, on the option that we have to look at data is going to be your tonnage. We keep coming back to tonnage. So what are we talking about here? We have May data, and we also have July data. August data is not out just yet. So what do we have here? For May was very interesting. Tonnage had a nice gain in May 2023, but remains in recession territory, said ATA chief economist Bob Costello. The 2.4% gain didn't erase the 4.5% total drop in the previous 2 months. Additionally, tonnage continues to contract from year earlier levels as retail sales remain soft, manufacturing production continues to fall from a year ago, and housing starts contract from 2022 levels. Okay, now that's your there's your 2.4. Next, we go to July. What do we see? The American Trucking Association Advanced Seasonally Adjusted for Hire Truck Tonnage Index decreased by 0.8 in July after falling 0.03 in June. So what do we see here in June? We see again further declines, but the declines are smaller than the increase that we saw before that. What are they talking about in July? Headwinds for freight remain in July, pushing the truck tonnage index lower, said ATA chief economist Bob Costello. Furthermore, a multitude of factors have caused a recession in freight, including sluggish spending on goods by households as consumers traveled more and went to concerts this summer, less home construction, falling factory output, and shippers consolidating freight into fewer shipments compared with the frenzy during the goods buying spree at the height of the pandemic are also significant drags on tonnage. So there we go. Did we just talk about that? I think we did. Now, guys, furthermore, the not seasonally adjusted index, which represents the change in tonnage actually hauled by the fleets before any seasonal adjustment equaled 111.5. 100 is your baseline. So in that's in July, which is 5.5% below the June levels. Okay. Now, trucking represents 72.6% of tonnage carried by all modes of domestic freight transportation. Okay. Let me say that again. Trucking of all domestic modes of transportation represents 72.6% of all tonnage carried. Trucking is the supply chain, and the supply chain is the economy. Trucking is the economy ultimately. That's why it's such a strong indicator of where things are. All right. Now, we're not going to get into tonnage and hauled. What we are going to say is that 80.7% of total revenue earned by all transport modes. Out of everything, we took nearly 81% of all revenue. This is including parcel services, trains, and, rail, and all kinds of stuff, right? Finally, the ATA calculates the tonnage index based on surveys from its membership and has been doing so since 1970. Since the 1970s, they've been doing this. All right. Now, the other part, again, I encourage you guys to look at this information. It's available. The report includes month-to-month and year-over-year results, relevant economic comparisons, and key financial indicators, all available to you for free at no cost. You don't have to join them. You don't have to do none of those things. And again, the CAS index is available to you. There's plenty of information. And Sonar, you can actually break it down. They give you all the information on how to read their charts. You have your freight wave national indices. You have your logistics managers index, which we made videos about that. I'll leave a card in the corner about that. I actually need to come back and revisit the previous months. Different things. You have your rail, intermodal. You have your maritime. I mean, anything that you might be interested in, the data is here. And these are basically your stock tickers telling you on how to read certain information. So guys, there's a ton of information that's available that you guys can follow through on, make it a habit to read this data, get this information out there for yourself to be able to plan. Once you have the data on your spreadsheets, once you're tracking your data, it doesn't matter if you got one truck. It doesn't matter if you have 100 trucks. Data is data, and you're going to have something that other people simply don't have. Now, luckily, we do use this data. We do collect weekly, as you see in our videos, but we also do it for the entire fleet, for dispatch customers, for carrier, for lease on owner operators, and those are the things that we do take care of. But ultimately, guys, we try to watch this to get an idea where things are going. Now, again, this year is going to be, or this recovery is going to be very different. We have things in place in the economy that simply did not exist and were not a problem in previous recessionary periods, in previous spikes. So when things jumped up, they jumped up for different reasons, and when they fell for different reasons. So this is going to be a very different approach. And so when we're looking at the recovery based on their information, we're looking at possibly getting into maybe spring of 2024 until we start to see some change begin. So it could be as soon as like October or November, we shall see, and I hope so. But more likely, it's going to go into spring of next year. So there's going to be more kind of more pain, more difficulties. But here's the thing, guys. This is the time that is going to either make you or break you. This is like super, super important because if you're still in a market, you chose to stay in a market. If you have made poor business decisions and you've decided to stay in a market, then stick around. If you can afford to, lose a bit of money or not make as much or, work very hard for very little, you have to get through this, because the last thing you want to do is get out of the industry or get out of the market and, then the market changes, right? So you ground all the way, you were grinding this entire time. Continue grinding, continue working hard. We're here for you. We're here to support you guys. And again, as always, if you guys need help, we're here for that. If you need help with those permits, we don't take care. I can send you an email. You can take care of the permits. If you're a new carrier and you don't know what's going on, I can send you your new entrant audit checklist, so that'll help you pass the audit. I can send you a whole bunch of useful information. If you're a carrier, you needing some help, you've seen our videos weekly where we show you our top grossing customers. If you're not making that kind of money and you have the work ethic, you have the equipment, give us a call. Let us dispatch you. We have a lease on program that is generally a whole lot cheaper, less expensive than many other companies in the market. However, you also work with the same dispatchers that do the videos every week. So at the end of the day, you have things that are available to you, and it's going to be up to you to pivot, to change, to make the market decisions that will ultimately, again, either make you or break you, to make the decisions with your fleet, with your business. You can't pick and choose. You have good markets, you make your money, save some of that money. If a lot of people didn't save any money and they ran out, that's poor money management, right? Number one reason why owner operators, stated that they went out of business. So don't make the number one, mistake. So next time the markets come up, quit your spending, take some of the money, set it aside, put truck money away, repairs, maintenance, all these things cost money. And you really want to make sure to start running your trucking business as the business business that it is. Anyway, guys, enough said. If you have any questions whatsoever, leave us a comment in the comment section below. Make sure to smash the like button on this video. I hope this video has been helpful. I hope it has been clear. I've tried to go very, very quickly. So if you need to rewind, go back, or anything like that, please feel free to do so. Please share this video. I really hope to kind of dispel this myth about there's no way there's not too many trucks in the industry. No way there's not too many new authorities in the industry. Oh, no way the volume's down. No way that that rates are where they are. There is a reason to this. The market prices everything into it, and if you have a ton of freight companies or trucking companies, it's going to price that in. If diesel is going to be all the way up there, it's going to price that in. However, let's please keep in mind that diesel cost and freight rates have zero correlation. So please don't mix that. Don't conflate those two things. In any case, guys, I could talk about this on and on and on. I hope it's been helpful. Please share this video amongst your friends and coworkers. Keep your head up. If you need any help, if you have questions, anything like that, please give us a call or text us at 801-448-6363. You can also go to our website at aftdispatch.com. And I invite you guys to go to our blog. There's well over 10 years of blog posts there. Some are better than others, but all very informative. Until next week, guys, look forward to speaking with you, and take care.